Lumber's down, hogs are down, gold is down, but is this the end of this nice run-up we saw in commodities this year? Well, we have the man who knows on my dad's shortwave radio. Will Rhind is the founder and CEO of Granite Shares, back with us again in the basement. Will, so happy you could make the return. How have you been this year?
I've been well, thank you. Yeah, it's been a funny year, many respects, but hanging in there.
Yeah, tell me about this this downturn recently. I've read a lot in preparation for this interview. Some people saying, well, the shine is off. Other people saying this is just supply chain things, right? Like the lumber issue recently now finally being solved. Why do you think prices have come down a little bit the last few weeks?
Well, specifically with lumber, that was a bubble, that was formed really on the, huge rush that people had in terms of, reopening the economy, getting construction started, people doing renovation projects that, while they were locked down, had sort of nothing else to do. It was kind of time to renovate that basement. So all of that stuff was really kicked into high gear, and then you had, supply problems getting the lumber, to the market. But that's come down because obviously now we've got the summertime, kids are out of school for the most part, and people want to go on vacation. They don't want to do renovation projects, and so that activity is slowed, and that's caused the lumber price to come down.
When it comes to the other commodities, though, and even the price of gold, as you know, through Granite Shares has come down. What's going on there?
Yeah, so gold has come down a little bit because as we all know, the key thing here is inflation. And, the Federal Reserve and those officials have been talking about inflation being transitory is the word that they keep using. And so what that means is they expect inflation to not be here over the longer term. This is a short-term thing that is a reaction to the economy reopening. And so because of that, the market and gold, for that matter, is sort of responding to that transitory commentary at the moment. So that's why you have gold prices that are a bit lower, and that's why you have the stock market continue to make all-time highs. Now, obviously, here's the key question, is it really transitory? And if we continue to have inflation, I think, throughout this summer period, indeed, we come into the end of summer still with elevated inflation, that could be a serious problem. I think this is something that it's a risk that the market's not really priced in at the moment, which is a breakout in inflation.
I've watched some previous interviews that you've done. I know around election time you had predicted that inflation might be a problem this year. We've obviously seen with all the stimulus that's come out, we've seen the specter that you're saying that now again, that inflation, in the future we may see more. Is that the key thing going forward, Will, for us to look at? Like if I'm trying to track where I think commodities or metals are going in the future, inflation is one thing I look at. Are there others I look at as well?
Yeah, no, absolutely. I mean, inflation is the most important thing for all of us from our own wealth perspective. I mean, that's the key thing. In terms of commodity markets will always be driven by supply and demand. And so it's the supply of that particular material or commodity coming onto the market, and then the demand for that particular commodity at a given time. So if you have more demand than supply, and that's a situation we've had in a lot of the key commodities,
Sure.
Look at oil, for example, then the price of oil goes up, and that in of itself causes inflation. That is inflationary. So the effects that people will see is, higher gas at the pump, higher gas prices, and then that knocks on through any product that is, petroleum or gasoline based.
I want to widen this discussion. If I'm an investor with the average portfolio, where do metals and commodities belong in the average portfolio?
Well, I think, first of all, obviously, I suggest that people should have an allocation particularly to gold in any portfolio, but you could extend that to broad commodities as well, for the simple reason that it gives a different return stream than equities and bonds. So you have the stock market at all-time highs at the moment. You have, interest rates, at or near record lows, so you're not really getting much yield from the bond market. And if anything, yields are going to rise, which is going to be bad for bonds. So put some commodities in there. That's a diversification play, gives you an alternative source of return from equities and bonds. And in this particular environment, you've got a situation where commodity prices are rising. So, you should think about a hedge in your portfolio. So gold, broad commodity, ETFs, that's a great way to do it.
I was reading a piece just literally 15 minutes ago before we started recording describing crypto as the new gold, as a new commodity. Do you see crypto as a commodity of the future?
I think it's much more like a commodity, I think, than a currency. And so from a commodity perspective, it's an asset that people want to trade, albeit it's completely digital as opposed to, a physical. It has no application or use in the real world, unlike the commodities that we know. But look, I think, here's something that is very popular with people at the moment. And, because of that, I think it's here to stay. I'm not sure that it's going to go away. But yeah, it has a lot of the attributes, obviously, that people associate with commodities in that it has that volatility and that ability to be traded. But yes, time will tell whether that's the inflation hedge in the same way as commodities.
I know crypto isn't your area of expertise, but I read that just before talking to you. And I thought, well, if anybody will have an opinion on that, it certainly is you. Last time I talked to you, Granite Shares were fairly new. Now I see you all over the place. You guys have a little twist on commodities, though, with what you do. Tell everybody a little bit about Granite Shares.
Yeah, sure. No, so we are a award-winning investment manager, a money manager. We focus on ETFs, or exchange-traded funds. That's a specific sort of expertise that we have. And what we try and do is we try and launch ETFs that are a little bit different from your average, fund that people can buy. So on the commodity side, we have our gold ETF, which is BAR, or BAR is the ticker. And that's one of the lowest cost ways to invest in physical gold. So you can have physical gold in your portfolio, meaning that the ETF is actually backed by bars of gold, real bars of gold that sit in a vault.
Strange name, by the way, for that that ticker BAR. Like, how many consultants, Will, did it take to come up with that that ticker?
Not many. Myself and some of my colleagues, we think about the ticker codes quite a lot.
That's the low cost way to get that done too, right there, right in keeping.
Yeah, exactly. It's important though to be able to get ideally it should. Just by looking at ticker code, you know what the fund is about or what the investment does. That's the real key to success. If you think bar, and you're talking about gold, gold bar, okay, great.
Yeah, I didn't mean
so we have the same thing with platinum.
Yeah, and I didn't mean to interrupt. I just couldn't let that go. So continue.
Yeah, so we have the same thing for platinum. Our platinum ETF is PLTM, or like short for platinum. And that's exactly the same construct as bar or gold, in that we held physical bars of platinum in a vault, so it gives you exposure to the platinum price. And then COMB, which is our broad commodity suite, think of it like the S&P 500 for the commodity world, and that invests in a index of commodity futures. So it's a regular ETF, doesn't generate a K1, and it's the lowest cost way to invest in broad commodities in the US today. COMB.
And if you're wondering, by the way, and we'll have all those ticker symbols and a link to Granite Shares on our show notes page at stackingbenjamins.com. Will, thank you for helping us with all this volatility lately. It was great to talk to you. Thanks for helping us kind of get a handle on it.
Pleasure. Thank you so much, Joe.